A $6 to $8 gap exists for the same silver. Shanghai prices near $82. COMEX trades near $76. That spread is 12.7%. That gap has not persisted without resolution. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, Asia reopens before New York. The next print decides direction. Let's get straight into it. Lead story today. Shanghai Gold Exchange benchmark fix. $82.11 per ounce on April 30th. COMEX silver closes May 1st at $75.36. Sunday pricing near $76.08. Effective immediately into Asia open. This follows persistent divergence since early April. Physical demand continues rising inside China. The unusual detail is the duration. This premium holds multiple sessions, not a single spike. The timing is what deserves scrutiny, not the event itself. The timing. Think about what that sequence actually means. A physical market pays more than paper pricing. That tension cannot persist indefinitely. Which side moves first on Monday? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. The last sustained Shanghai premium above 10% preceded sharp COMEX repricing. The data is already telling you something. Let's build it out. Now let's build the full picture because this divergence does not exist in a vacuum. World Silver Survey 2026 has dropped. 46.3 million ounce supply deficit projected. Source is the Silver Institute. COMEX registered inventory sits near 77 to 80 million ounces. Source is CME Group warehouse reports. Open interest sits near 550 to 575 million ounces. Coverage ratio near 13 to 14%. That is below stress thresholds for 6 months. Shanghai Gold Exchange reports continued withdrawal demand. China imposes 13% VAT on physical silver withdrawals. PBOC import quotas limit inflows. UN capital controls restrict arbitrage flows. Compare that to 2019 conditions. No persistent double-digit premium then. Now it exists across multiple sessions. Add second data set. AI data center capex exceeds $715 billion. Sources include Meta, Alphabet, Microsoft, Amazon filings. Solar panel demand remains elevated globally. EV production continues scaling in China. Third data set. Less than 1% of COMEX contracts settle physically. Source is CME delivery statistics. The rate of divergence is not slowing, it is compounding. The data is doing the talking. The ones who were dismissed for warning shortages are quiet no longer. And here is what makes that picture even harder to ignore. 6 consecutive annual supply deficits now exist. Structural demand exceeds supply persistently. At the same time, real yields remain positive. U.S. 10-year Treasury yields near 4.35%. That creates pressure on non-yielding assets. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups take time. They do not resolve on demand. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not discussing. DXY falls to 97.80 intraday Friday. That is a 2-month low. Now dollar weakness becomes primary variable. Because this is no longer a backdrop. It is the primary variable. Bank of Japan intervention drives yen strength. Intervention reportedly coordinated under G7 communication protocols. DXY closes week near 98.18. Lowest weekly close since late February. That makes dollar-denominated silver cheaper globally. That increases foreign demand mechanically. Cost side becomes unavoidable. Energy markets remain tight from Iran naval tensions. Oil pricing influences inflation expectations directly. Markets still price-controlled inflation trajectory. Look at DXY trend and tell me probability of stability. When markets price sustained dollar weakness, silver reprices higher, gold reprices higher. That is the historical pattern. Every time sustained dollar weakness emerges, metals respond. It has not been different yet. Silver Western spot sits near $76.08 ounce. Shanghai implied price sits near 82.11. That creates $6 to $8 premium. Short-term picture remains unstable. Volatility expands with macro inputs. Silver traded $73 to $76.94 intraday May 1. That range reflects uncertainty. Key event is Shanghai Monday Open. If SGE opens above April benchmark, pressure builds upward. If premium holds above 10%, gap must close. If dollar remains below 99, demand remains supported. If Iran tensions ease, oil drops sharply. That reduces inflation expectations quickly. If DXY rebounds toward 100, metals lose tailwind. That is the only short-term read that matters right now. As for trading it, there is no clean lower time frame structure. Direction is not clear tomorrow. Nobody can tell you Monday with certainty. If someone claims that, verify their track record. Current environment remains headline-driven and unstable. Sidelines is not weakness in this environment. It is the only edge there is. This market has been called both directions before. It will be called again when clear. Right now, clarity is not present. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one ignored creates losses, so both must be examined. The bear case is real. Real yields remain positive at 4.35%. Iran peace developments could collapse oil prices quickly. DXY rebound toward 100 would pressure metals pricing. The bull case is equally real. Shanghai premium holds near 12.7% across sessions. COMEX coverage ratio sits near 13%. 6 consecutive supply deficits confirm structural tightness. Size correctly. No positioning before entering. The physical market already reflects demand reality. The paper market still debates pricing levels. That argument does not last forever. Everything shown today points to one conclusion. Physical demand exceeds paper pricing globally. The only question is which side adjusts first. Don't take my word for it. Verify every number I gave you today. Check the data yourself. Shanghai Gold Exchange, CME Group, the Silver Institute, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for confirmation. They prepare before the move happens. The ones paying attention already see the setup forming. The ones who verify do not argue about the direction. They track the data. Sit with that. OG John AG 1.0 out.